This is Last Week in 5 Minutes or Less from Albion Financial Group, and I'm Mike Kessler, Senior Portfolio Manager here at Albion, with your update for the week ending at the U.S. market close on Friday, August 13th of 2021. Last week saw solid gains in the S&P 500 and the Dow, both of which closed at new all-time record highs on Friday. As of Friday's close, the year-to-date total return of the S&P, including dividends, reached 20% for the first time in 2021. As a reminder, the S&P's total return for the year 2020 was 18.4%, including dividends, and that followed a 31.5% total return in 2019. In contrast, the Nasdaq pulled back slightly last week, driven in part by some softness in biotech stocks. Meanwhile, small and mid-cap stocks were mixed and no longer lead large caps on a year-to-date basis. Internationally, most developed market equities were stronger, while emerging market equities in aggregate were slightly lower. Chinese stocks rallied early in the week, only to be met by renewed selling pressure on regulatory fears as the week progressed. MSCI's China Index finished the week essentially unchanged. In bond market news, Treasury yields moved higher early in the week before falling abruptly on Friday in the wake of a significant decline in the University of Michigan's consumer sentiment gauge. More on that in a moment. In the end, 10-year and 30-year Treasury yields both finished the week 2 basis points lower than where they started. In corporate bond markets, investment-grade credit spreads held firm, while high-yield spreads continued to drift wider, as they have over the past several weeks on concerns about tail risk associated with the Delta variant. Most commodity and currency markets had a fairly quiet week. Oil was little changed, while the U.S. dollar held its ground relative to most major foreign currencies. Bitcoin continued to rally, however, closing at approximately $47,600 per coin, a gain of nearly 60% in less than 4 weeks after closing below $30,000 back on July 20th. Finally, economic data was plentiful last week. The Job Openings and Labor Turnover Survey, or JOLTS report, showed more than 10 million U.S. job openings for the first time in history. Headline Consumer Price Inflation, or CPI, held steady at plus 5.4% year over year, while core CPI, which strips out volatile food and energy prices, came in at plus 4.3% year over year. Meanwhile, producer price inflation, or PPI, rose to plus 7.8% year over year, or plus 6.2% ex food and energy. Initial jobless claims fell for a third straight week to 375,000, while continuing claims fell by 64,000 to 2.87 million, in a sign that the labor market continues to improve. And lastly, the University of Michigan consumer sentiment gauge fell to 70.2 in August, a new pandemic-era low. This low reading is in stark contrast to the Conference Board's Consumer Sentiment Index, which stood at a pandemic-era high of 129.1 in the July reading that was reported just 2 weeks earlier. While their methodologies differ somewhat, these two measures of consumer sentiment have been closely correlated in the past, with an R-squared of approximately 0.7 in monthly data going back to 1978. Economists currently expect the Conference Board's index to fall somewhat when that series is updated at the end of August, suggesting that the University of Michigan survey may be slightly ahead in terms of capturing a shift in sentiment related to the rapid spread of the Delta variant. That's all for now. Thanks for listening to Last Week in 5 Minutes or Less from Albion Financial Group. To hear a recap of the previous week in markets every Monday, search for Albion Financial Group on your favorite podcast app. In the meantime, we hope you have a great week, and we'll see you next Monday.